Hello, my name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today's your weekly update for the week of about January 19th, 2024. Rates got worse this week. A lot of that has to do with the Fed. Waller spoke on Tuesday, and he didn't really say things that were conducive to rates coming down. So, of course, throughout the week, there was an upward pressure on rates. Now, here's the interesting thing. I'm going to pop up a chart here, and it's going to show you probably about a 1-month chart, but it's going to show you that rates come down a lot of times before a 3-day weekend. A lot of that has to do with supply and demand. Some of it has to do with a lot of people in secondary desks in different organizations or companies trying to leave early. So there's a lot less demand on mortgage cash, which means rates tend to come down. It's just a trend. It's just a trend. Yeah, sorry. Other than that, what you're starting to see now is rates leveling off / slightly ticking up for the month of January. Again, we always expect February rates to go up every year. They come down in November and they go back up in February. So it's just something we expect to see. If you look at where rates have troughed this last winter, or late fall, early winter, depending on where you are in the country, you're going to see that November, December, they came down. January, they were a little bit lower. But look where they kind of equaled out to. It was much earlier in the year. So they came down quite a bit. Now, it is an election year, so I'm going to say this over and over again for this entire year. We're going to expect rates to go up unless they don't. So our expectation is upward pressure. So we're always going to expect tomorrow to be worse than today. But at the same time, if good data comes out, then good data comes out and you'll see rates come down. It's an election year. Typically rates do come down, but we're still going to expect them to go up instead of coming down. That's just plan for the worst, hope for the best type of mentality. Now, we won some awards. More awards and more awards. So this is from Rocket Mortgage, and we are the top VA mortgage broker for 2023, or one of the top. I don't think we're the top. There's no way. We sent them about maybe a quarter of our VA traffic, and then I've got one for loan officer volume. But we do a lot of VA loans. A lot of VA loans. About half of my volume personally, and roughly about half of the company, a little less than half of the company, is VA. And if you can do a really good job on VA, conventional and FHA are pretty easy. With that being said, we know what we're doing, and it kind of shows. Now, rate-wise, remember when we talk, we can't talk specifics on numbers, and I'm going to be more vague on numbers moving forward, and that's just because as a realtor, you're getting an email. The email has the interest rate specifically. It has the scenario. So for example, when we always run it, it's a 700 FICO, 400 loan amount. We try to keep it really, really simple. But right now, government is mid-5s, solid mid-5s, and maybe a little bit lower than mid-5s, depending on credit and a few other things. And conventional's mid-6s. But again, higher credit score, so a 740, mid-ish 6s, but if you have really good credit or you're putting more than 5% down, we've seen it drop, quite a bit more than that. But again, when we're talking rates, we're not talking buy downs on rates unless it's, clearly notated. So check that email for rates. You can also search the website, lcmloans.com/rates. Next week, not quite sure what's going to happen. I just hope, my biggest hope is that rates stabilize and stay stable like they have been for the last few weeks. With that being said, it only takes one person, just one person somewhere in the government, somewhere, to say something slightly out of skew, and you'll see what happened this week in rates. They go up. Anyways, have a great week. I'll talk to you later, and have fun. See ya.